So today we'll be talking about how to trade using risk entry or confirmation entry. So I'm going to show you the difference between these two guys. So how you can be able to trade the risk entry and what confirmation entry. So right now, if you're an ICT trader, guys, you will understand what you call a supply and demand. So we are going to use it here. So, but if you are not an ICT trader, you don't know what is supply and demand. I already made a video about supply and demand, so you have to go and watch it, guys. So you can see this drawing in here, guys, and this is if you look at these two guys, these two are risk entry, and you can see how I draw it that the price go up here and come down, and the price um, made a this thing here, like it give us a entry here to enter, guys, and it give us a supply zone here, and after then it come down here, guys. So if you look at here, you can see that the price has been making here right now is making a break of structure after the price make a give us some supply zone here and went down and start here making a break of structure and go up here and fall down here, guys. So this is what you call what risk like risk entry if you want to trade it. So let me explain it more, guys. So in a risk entry, a trader might see this supply zone, like you see a price going to this level, guys, going to this place, and after it, like price made us give us a something like a pattern here, then after coming down you'll be waiting for it to go back to this supply zone. So this is your supply zone, so you see this pattern and you mark it as your what a supply zone. Let me just make this test this thing, guys, so that you can be able to see it what I'm doing here, guys. So let's say that you see this thing like this, you see this thing like this, then you mark it as your what as your supply zone, right? You are marking it as your what supply zone. So after marking it as your what your supply zone, then what are you going to, you are marking it as what as a supply zone like this to enter a trade, guys. So you see a price making this pattern, then you mark this place as your supply zone without what any confirmation, because you see it on a higher time frame. Maybe you see it on a 1 hour or 4 hour time frame, then you mark it, then put your risk reward here, and the price later went down to this place, guys, and you take your profit. Then this one is that you saw this pattern here. Let's say you saw this pattern here, and the price made the same thing, but this one is now you are buying, you are going for long, and after the price will give you a demand zone here, you mark it here, and you are waiting for the price to return to that demand zone, and after the price have returned to demand zone, you enter what, you put your buy here and put your stop loss here, and the price went up like this. So this one is what you call what risk. You didn't confirm it on a what, on any you didn't confirm it, you just put it because you saw this is the your what you are so your demand zone and enter it, guys. So let's move on to this confirmation zone, guys. So the confirmation zone, e look the same thing as a risk entry, but I will show you the difference right now. You see the price go like this and move down, and also made a break of structure, and also you mark your what your supply zone like this, and you are waiting for the price to return to this your supply zone. Instead of waiting to the price to return to this zone, guys, like you see that the price have returned to this zone, you still need what, another what, confirmation. You still need another confirmation. Unlike this one, you just enter, maybe you don't have time, you don't want to do anything, you just enter. But this one, you go to what, your lower time frame. What do I say? You go to what, your lower time frame. Your lower time frame can be what, 5 minutes, 1 minute, 15 minutes. So that is it, guys. So and you go to your lower time frame to confirm it what more, to know if this thing is actually, you dey give you the pattern you can enter sell, and after you have enter sell, the price went down like this. So what's the difference And let me show you this one again. You go here and you think that price is give you your demand zone, and you enter what your demand zone around here, guys. You enter your demand zone and mark it here, and the price later return to the demand zone. And instead of you to enter immediately, you go to what lower time frame and confirm it, and the price later go up. So you'll be wondering, how do I confirm it on a lower time frame? So I'm going to show you how you can do that, guys. So let me just draw something here and show you the lower time frame. Maybe that you price have entered here. So what you have to do is to go to what your lower time frame and see the price making. Maybe that you are selling, you see a price made a something like this. You see that the price have made a something like this and made a break of structure. Then you like the price um to to return. So the price make what a break of structure, and instead of the price making a break of structure, the price made what a change of character. So the price what made what a change of character like this. So and after the price made what a change of character, you'll be waiting for the price to return to that zone, guys, um to return to what to this place, guys. So the price to return to this place, and you enter around this place, guys. You enter what around this zone, guys. So maybe that you are buying, so you are buying, you are waiting for the price. So instead of you go to lower time frame, and the price made what break of structure, and unable to, and this place if is unable to make what a break of structure and made what change of character. And after making a change of character, in return here, you mark this place as your what as your demand zone, and the price later come to that place, and the price later come to that place, and you enter what you are buy again, guys. So let me show you another one here. Maybe that your price is going up, like price is going up like this, and you making what a break of structure, making a break of structure, making a break of structure. And instead of making a break of structure like this, it failed and went down like this, and what form what a change of character. We show you that the price is now going for a change of character. Then yeah, you mark your what a change of character, and you mark your what you mark your supply zone, then the price return to that your supply zone, and you enter around this place, and the price went down like this. So this is how you can be able to do it, guys, and this is what you are this place become your what your supply zone, guys. So I'm going to show you more on a lower time frame. So this will become your supply zone. So we are going to go to chart to show you how it works, guys, so that you can see what we are doing here, the risk and the confirmation, so that you can see the difference for more clear, guys, so that you can see the more clear of it, guys. So I hope that you like what we are doing here, and if you just have any question, you can just ask on the comment section. So now let's move to the chart, so I can show you more. So this is a gold, and you can see that this place right now, let's see risk. Let's look at risk. So let me show you about what risk this thing, guys. Let me just show you about risk. Risk entry without what without confirmation, just without what confirmation. So okay, let's look at this place, guys. So this place right now, you look at this place as your supply zone, guys, and the price later come to you mark this place, and the price went down, and later come to your supply zone, and you enter what you take your what you are short as the place, guys, and you take your short at this place, guys, and price later went down like this, and you take your profit around this place, guys. No, this place right now, you don't need any what confirmation. You just enter because you saw your what this place is what is your supply zone, and you enter it, and the price went down again. So let's look at, like, you are buying And let's look at demand zone. So that I can show you. So like, let me just show you a demand zone, guys. So something like this place, guys. This place, you can see this place. So this place right now, you see that the price is going from your demand zone. You mark your demand zone, and the price will return to your what? Your demand zone, and you enter what? You enter. You go for what? You go for long, and price later went up at the way you expected, guys. So and you made your what? Your profit. You didn't take any confirmation. You just your own is just you just see what um your demand zone, guys. You can see. So this is the example of what we did as was. This one is called what? Risk what? Entry. So there's no confirmation on a lower time frame. So right now we are going to go to show you on how you can be able to do it on what? On a lower time frame. Let's look at example of this one right now. So this one right now, I'm going to still use this example. So right now, like you see this thing right now, instead of you to enter immediately, you go to let's say something like 15-minute time frame. Let's use 15-minute time frame. So and to confirm it if it's really what you want to trade. So if you look at right now, let's know if you can trace it on a 15-minute time frame. Okay, let's go back. So this is what we need. You need what? So you can now choose the one that is okay for you. If you want to trade the kind of thing that we want to trade, guys. So let's see if you can find it here. And I'm going to, if you couldn't find it, then we can use another one to give an example here. So to see if you can able to um, see it. So, but I hope that you understand what we are saying here, guys. Let me just mark this. So, let me just know if I can see um, the confirmation zone. Let me know if I can see the confirmation zone, guys. Okay, let me see. Okay, like this place right now is also example. So this place right now, but I just still need that 4 hour time frame so I can use it to explain more on how you can be able to do that, guys. Um, so I don't think, okay, this place. So if you see this place right now, I don't think why. So if you see this place right now, we need what? We say that we can use what? Confirmation entry to mark this place, guys. So I know this place is going to be long if you go to 15-minute time frame because it's 4 hour time frame. But let me know if I can able to trace it. I know it's going to be long, so that's the thing that I just want you to understand that if you begin to trace it, it's going to be long on a 15-minute time frame. And that's the thing, guys. And let me just search for it and see if you can. Okay, I think I saw something. Okay, not it, guys. So um if no is a 15-minute time frame, and I would have used what 1 hour time frame to do that. So, but if I couldn't find it right now, I'm going to explain to you what is, but it will be better. I'm going to explain to you how you can be able to do that for confirmation. So, right now, okay, that is it, guys. I have seen it, guys. Okay, so you can see it, guys, that this is the 4 hours time frame we said, guys. So you see that this is your what? This is your, you can see that this is a 15-minute time frame. This is your what? You are, if you look at right now, you can see that the price went down here. You can see that the price went down here. Let me just zoom it again so you can understand this thing, guys. I like it right now because I have seen what I'm looking for. So you see that this is your supply zone, guys, on a 4 hour time frame, and the price went down, make something like, you can see, making some break of structure there, guys. So and after here the price finally make what, a break of structure. The price is going up, going up, going up, and look at where the price make what, made what, change of character here. So this place is where um the price um made what, a change of character. So this place is where the price made what, a change of character. You can see that the price has been in uptrend, making, you can see, making a break of structure, break of structure, break of structure. Um, Unlike, so this place is where the price formed, and this place is where the price later what, um change of character occur, guys. You can see the price later made a what, a change of character around this place, guys, because the price has been in uptrend this place, guys, and you allow the price to make a change of character. You can see there is a change of character here. Let me just mark it, guys, so that you can see what I'm talking about. You can see that this place is a break of structure. This place is a what, a break of structure here, and there is a what, a break of structure here. This is a break of structure, and price went up like this and made another what, break of structure here. Although you might not see it very well, but this is also what, a break of structure, and made a break of structure here. So and so you can see it, guys. So made a what, a break of structure. So after making that a break of structure, the price went down and made what, a change of character. So let me just draw it. Let me just draw it, make it a duplicate so that you can see it, guys. Okay, you can see. So after making this a break of structure again here, then the price went up and unable to make what, another. Look at where the price failed. It failed here because it was unable to make what, another break of structure. So we mark this place as your what, as your um supply zone, as your what, supply zone, guys. So we mark this place as for what, as our what, our supply zone, guys. So you can see, so this is the place is unable to make, guys. So let me just mark it. It was unable to make a what, a break of structure. So it was unable to make a break of structure around that place. You can see, so after this place the price went down and go down. So and you can see that when the price went down, the price made what, a change of character. You can see it grow above this our line. So you can see that it's past this thing. So we are now, it shows that price return to that level, guys. Return to this level where there is what, a change of what, character. You can see it. So price return. So this is a place where you are going to enter for your what, you are short. So this is the place where you be skip for your what, you are short. So instead of going immediately to enter, so this is the place where you are going to go for what, confirmation. You can see this is where we confirmed it, guys, and that is the place where we confirmed it that it is actually made what, a change of character. And this you can see, so you can see that the stop loss is very very small here, because you are, if the price is unable to, you can see where the change of character occur. So you take it to the, and the price return to that level, guys. You can see to that level. So we give it what, another stop loss, guys. So the difference between this change of character, the lower time frame confirmation and the higher time frame risk, is that this one have a small risk and the other one have a bigger risk, guys. You can see this one has a bigger risk on a 4 hour time frame, and this one have a short risk, guys. So that is the difference. You can see that both of them have, and if you are doing the same thing, you can see that both of them have a small risk and both of them has what, a bigger profit, and both of them have a different risk, guys. So this is where I just want to show you the difference between what, confirmation and what, and risk entry, guys. I hope that you understand this, guys. So, and if you have any question, guys, you can just ask, guys, so that we can uh, continue on your question, guys. So you can like we can answer your question, guys. So this is what we did, guys. So I hope that you understand it, guys. So the risk, it doesn't need, the risk have a very big it have a very big risk. Like if you are entering this entry, it have a very big risk, but this one have a small risk. So the confirmation have a very risk, like you are risking small, but this one has a very big risk, guys. Those are how, that's the difference, guys. So I will see you in my next